See the sweat on my brow? What a night and what a day. I've had 3 hours sleep and I'm Ira Epstein. And this is your metals market update. And this is for Wednesday, January 8th, 2020, and the time just after 4:30 p.m. Central Time. So yesterday when I did the reports and I put out your videos, I had a foot out the door and then the missile strike happened. And as you know, the markets took off where the gold market got up as high as 1613, hit a lot of objectives that different traders had up there, and then sold off as we saw the president's statement in his counter was basically one of detente. And any way you want to cut it, you never know what he's going to do. That's what makes him so unpredictable and maybe so good at what he does. We saw an attack just happen where the green zone in Baghdad has had a couple of missiles thrown at it. The sounds of it, it's not Iran. It sounds like it's some of their de facto groups, as I like to call them, and they're probably not happy with the situation. You can only control so much, but I don't think that the U.S. and Iran are going at it just at this moment. I think that everything is sort of quiet again. The market's going to quickly turn on you to the impeachment. Is it going to move out of the House into the Senate or not? The market's going to move on you to the USMCA deal, Brexit talks. It's going to go on to the U.S.-Chinese trade talks. There's a lot coming out. But when an event ends in this phase of the U.S.-Iranian situation ended this morning, things get pretty crazy, and you get markets that people that are the wrong way or algorithms, and algorithms don't all win. I hope you understand that. They get the wrong way. They step on themselves, especially in evening trade when it gets very thin. Now, on the weekly chart of gold, nothing has changed. You're still up $7.80 for the week, $7.80 to $15.60.70. And that's a close-only basis. It's the best close we've had in years. What the market did do is what I was talking about the other day. What we had as of Monday, January 6th, was a gap in the chart. And there's two ways that gaps take care of themselves. Typically, they come back and fill them, but you can also end up in a few days with what's called a breakaway gap. And a breakaway gap would be action like this, that even though you tried to fill it, you didn't. If the market just took out over these highs on a piece of news, then you have what's called a breakaway. Your dilemma is if it gets up there and doesn't hold, you can have a problem. And that's what happened last night. The market, first off, opened over here, takes off to the upside and right back down. And as you can see, what the market did, if we have the open here, I'm looking to see if we don't. Now, yes, 1578.80 was the opening right over here. It went up on the news, then came all the way down, filled in the gap, and held it there. That does not mean anything other than I have done my metal report for you. And in my metal report, I told you I would get one done if you're a subscriber of mine. It's up on our website already. I cover all the details. It's to the shorter term and longer term charts on it, along with price counts, along with seasonals. It's a lot of info, and I'll get to it in a moment, but it's on our website under www.iraepstein.com. Under the word research, you'll see the metals report. So I cover this. What you did is you did a blow-off top today to a degree. It will take some other event to get through this high. I don't know what that event is. I'm not pretending I know what it is. But this is an awful bad piece of information in terms that the market got up to a high and couldn't hold it and had a reversal. So until that's taken out, you're in a pause area as I see it. Has the bias changed? No. You're still over the 18-week average and the 100, but you could fall back to these numbers. You got to be careful here. This market can start stepping down. Does it have to go to 1511.70? Of course not. Remember, that 1511.70 is jumping at the tune of about $5 a day. So when we reopen tonight, because it's an 18-day moving average of closes, it's going to drop some data here, replace it with the higher data, and even though you close lower, it's still a better close than you had back here, and that average is going to go up. What also happened? The market accomplished this crossover goal. This was without a crossover. Here you got a crossover. We had talked about that. Would the market be able to make a new high for the move? Challenge that one at least when you get a bullish crossover. Well, that's often what happens. Market went up to it, and then it let go, came right back down. So until today's high is taken out, and especially if it were taken out tomorrow or the day after, that would be rather dramatic and set off even a further run. And I talk where the market ultimately could go if that happened in my special report. I wouldn't be surprised if we enter a consolidation phase, sort of what the stock market has done. And I realize people are going to say the stock market's gone on the futures and everything. It's still chopping, and I'll show you that in my financial video. When I take a look at Bollinger Bands, let's you and I take a look. The market was 1, 2, 3 days in a row over the upper Bollinger Band as of the close last night. That gives the market a 98% probability, the way that I teach my charting, that prices will give you a better entry if you want it under the Bollinger Band than there. It did, but two elements happened. Number one, the Bollinger Band lifted because the market's been going up. But it still gave you a better opportunity. Should you have taken it? Well, when you lose an embedded reading, and that's what you did today, the odds favor that if you don't get it back the very next session, which is tonight's session and tomorrow, that the odds favor price and the 18-day average of closes, or the 100, the closest of those, are going to make a run at each other. That's what I would not be surprised to see. Am I bearish? No, the market's still over those averages. I just think that you ended a cycle in this market, and now the market's got a chance to do some pulling back. What about GLD? Because I look at this as a proxy. The way that we look at those militia groups in Iran, they're proxies of Iran. So those missiles that came into Baghdad today, and that was after this morning, that happened late today now, wouldn't surprise me if it's a proxy group. Well, this is a proxy because you're looking to see what this market's doing. Now, let me come here so I can move the charts with you. If you look at the high here on this day, it was 148.48. Market comes down, but you've got a series of closes. That close is 147.97 over the upper Bollinger Band. That's 2 days over. 3 days over. This settlement price at 143.95, right over it, that's 4 days over, 5 days over. You've got a big stretch here. You're going to eventually get back under that band. You got to be very careful with something like that. And that's what happened. The market finally decided today, there's your outside day down. I think the futures market led this market. This market wasn't the leader today. It was all futures. Remember, futures were trading through the night. Then it got a chance in the morning because you don't open these ETFs until 8:30 a.m. Central Time. We had a whole evening of wild trade in the futures market, and this market's dependent on what the futures do to decide where it's at. It held the embedded reading. That's bullish. Will it lose it, or is it going to just back off a little bit, hold, and force the futures to hold? In other words, they play off each other. I'll be watching that tomorrow because there is a divergence there. The gold-silver ratio is telling you nothing. It's stuck at the 18-day average of closes, just hanging right there. When we come over to the gold miners, let's take a look at this, if I could, right through here. I'm going to first do this chart. Lower highs, lower lows. We had a big reversal day right here. That was your warning sign that something's not right in wherever country you're thinking. And the market has lost the embedded reading. Where did it go to? What's the line in the sand number that I talk about? That 18-day average of closes. So the correction has set in, which makes sense as to what went on in the futures market today. And that's all that I'm seeing. Even the juniors did the same. So let's assume we fall more. I'm still going to look for support at the 100-day average in both of them. And this has the combination, the juniors, of the lower Bollinger Band and that number. Are we overbought now? Absolutely. Is the market in a correction phase? Yeah, but a correction could be a chop phase too. In the silver market, update, let's take a look. Coming into today, here you are. You still got the higher lows, higher highs. You'd hit the Bollinger Band. You backed off. You have the embedded reading. If you go up again to it, I wouldn't be surprised that the pros step away again. got up to the 1862.5 zone, you're pulling back. You also lost the embedded reading. Am I bearish? No. That doesn't mean you can't fall hard, but you're not over these numbers. And like the gold, now we're getting to an interesting point where the 18-day average is challenging the 100-day average. I like what I'm seeing there. In the copper market, do you want to be short, bullish, neutral going into the U.S.-Chinese trade deal? I think that the pros are covering shorts against the lower Bollinger Band. I don't know that they've entered into the bull phase yet, but the market's got a pattern of higher lows, higher highs. The settlement at 281.20 squeaked out over the 18-day average. So going home, the bulls grab control. Until today's low is taken out, I think that you have a market that now has developed upside bias, and if it can get follow through, the possibility of getting to the upper Bollinger Band there. Where am I wrong in my thinking? If you take out today's lows, I'm definitively wrong. In the platinum market, we're in a correction phase. The market without today's action, you had the pattern of higher lows, higher highs. Where would the resistance be coming in? The upper Bollinger Band. Now your momentum has broken down on you ahead of price. You had momentum here that was embedded and then it lost the reading. So you've got to pay attention. This reading was lost Monday, not today, Monday. That means that the odds favor price and the 18-day average are going to try to make a run at each other. Yesterday you get your bounce. You had follow through last night, couldn't even get up to that number. And now you're basically within $2 of that number. So you're very close to it. And until you take out today's high, because it's an outside day down, I think the market went into the swing line down. The bias is up, momentum down, the chart's a mess. In the Palladium, what's the bull market still left? And I told you, in my opinion, you've just got this group of shorts that don't believe that prices can keep going, and you're up another $47 an ounce today. Now, this market is not easy to trade. First of all, the margins are crazy. They're $12,000 to $15,000 for a contract. The movement, though, is impressive as can be, and this has a lot to do with hopes that the emerging markets are going to come alive, world economies are going to do better, and so on. I told you I wrote my special gold report, and I did. It covers in detail the seasonals, the weekly charts, the daily charts, plenty of chart analysis for you to work with there. And then I did the price counts for you, and I give you an idea as to what I'm seeing, both longer term and shorter term. So you get an awful lot of the data. You can view it by going to our website at www.iraepstein.com. You'll see under the word research, click up there, the metal report, click on it, and away you go if you want to see it. How do you view it? www.iraepstein.com. If you have a problem, let our staff know. I'm Ira. You have a good day, and I will see you all tomorrow.